Good morning from Los Angeles. Welcome to Power Hour Friday, August 15th, 10 a.m. Pacific, 1 p.m. Eastern, every Friday. And welcome to Option Expiration, monthly. Nothing like triple or quadruple witching. But yeah, market's just very close to all-time highs. It's doing what it's doing, but underlying different equities are absolutely going bonkers. They're moving ridiculous amount of dollars. So I'm going to go through my position list. I'm going to also go through my watch list, which I will post on Sunday for you guys to be aware of what I'm doing for next week. Yeah, welcome to Power Hour every Friday, 10 a.m. Pacific, 1 p.m. Eastern, followed by Trading with Sergio every Monday, 10 a.m. Pacific, 1 p.m. Eastern, and on Wednesdays, Trading with Sergio Wednesday edition every Wednesday, 10 a.m. Pacific, 1 p.m. Eastern. And I live on StreamYard these days, and my members only live. Thumbs up to my members. Amazing group, really. Um, we I mean, we're learning. Their language is changing. The way they post is changing. The way that they're treating their positions are changing. I couldn't be happier. And that's on Wednesdays between 4 and 5 p.m. Pacific. In order to be able to participate in those live streams, members only ones, you have to become a member. Click join, email me, sergio@sergioavadian.com. I will send you the Telegram chat group link where I post all my trades live without it being financial trading or investment advice. Not only they get that, but at the end of the day, they get the position summary of my positions. And yeah, those are the perks. And they get the replays, obviously. And on the members' lives, it's like a tutoring session, or they can ask me questions that they wouldn't ask me otherwise. It's like a more one-on-one kind of a handling of the group. So yeah, it's going well. Channel is growing slowly. I didn't expect much, but I'm not doing this for YouTube. I'm doing this to pay it forward. I'm doing this to educate, to inform, because there are two topics I'm going to talk about today. Two. One, you stay the heck away of something called BNPL, Boy Nancy Paul Larry. You guys will see. Number two, I'm going to talk about the favorite topic of mine, why investing is absolutely necessary, specifically investing in hard assets, because our national debt just hit another wonderful round number. I will talk about that as a segment. Yeah, I created the YouTube channel just to vent out because I'm so frustrated with what's going on in the country. I'm so frustrated that we're just a much bigger version of Greece with a printing machine. It's just so frustrating to me that I'm fine. I'm okay. But what about the kids? Why are you guys mortgaging the kids' future? Did you guys know that every single newborn this second incurs $125,000 in debt, which will exponentially grow during their lifetime? College student loans, then credit card companies come around and start giving them the plastic crack. I'm not against debt. I have plenty of debt, but it's manageable debt. I'm not in the, what's that guy's name? Dave Ramsey? Is that what his name? I don't know what his name is. He is the excuse me, he is the anti-debt guy. Oh, you have to pay your debts off. No, you don't have to pay your debts off. You have to manage your debts. If you're using credit cards, pay your credit card balances full every month. And if you can't, don't buy the garbage, because that means you don't need it. Don't go buy groceries on credit cards or buy now, pay later plans. Just don't do it. It just doesn't make sense, right? Banks are rich already. They don't need more money. They don't need more money from you. On top of that, what you all do is you go put the money in their senior savings account, which is a zero. Absolutely. You know how much money I have in my Bank of America account? Probably like $80. Why do I have to deposit my paycheck at the bank? Why? Right? I mean, I get it. You have to write checks and do this, pay bills and whatever. No. How about you open a Robinhood account, put it in there with 4% APY, earn some interest. It's not going to cover inflation, but it's better than nothing. It's better than going and putting it at the bank at 1%. And then they turn around and sell that money back to you at 12% on a subprime car loan, or 8% on a car loan, prime car loan, or 7.5% mortgage, or 35% on a credit card. They don't need any more money. They don't need any of that. I control my destiny. And that's why I started the channel. Educate, inform. Because there's a lot of garbage on YouTube. I mean, people just say stuff. Oh, look, I made $1 million today. I'm like, great, excellent, wonderful. Again, trading, investing is not a sprint. It's a marathon. It's consistency. It's what you do. It's what you learn and how you execute that, how you manage risk, all these things. People just need to understand. If you don't invest consistently, if you don't dollar cost average into an index, every single dollar you have extra coming in, you are going to be left behind. You are not going to catch up to inflation, because inflation is 6 or 7% a year. Unlike the government gaslighting and saying, oh, inflation is great, it's 2%. My butt is 2%. It's not. It's not. I said this a million times. The $100 bill that you look at today, it still says $100. Nominal face value, $100. Yes? Okay. Compare that to just 5 years ago. How much buying power has that $100 lost? Minimum of 30% in the last 5 years. So that $100 that you see, it says 100, it should say 70 from 5 years ago. And from 20 years ago, it should say 0. 0. Okay? So this is what I'm trying to preach here. This is what I'm trying to explain. This is what I'm trying to get across. This should be the topic of conversation at dinner tables, at parties. It should. I get it. I get it. People are, working all week and they have other things to talk about. This is what we should teach at elementary school and high school, colleges. This is what we need to do in this country. The wealth gap is as large as it's ever been. In order to close that gap, we need proper education, proper information, starting at a yay high at 5 years old. You can do this in your own house. Start with the small neighborhood, right? Then go talk to your cousins and go talk to your family and go talk to at a Thanksgiving dinner, hopefully coming up. Go talk about finance. Don't talk about swinging zero DTE options. Talk about long-term investing versus short-term trading. I do both. I'm okay with it. I'm good at it. But if you can't trade, and if you don't have the time, and specifically if you don't have the knowledge, don't mess with day trading. Don't. I have a video coming out at noon today, literally in 2 hours. It gives you your odds of profit. Day trading, 1 year investing, 10-year investing, long-term investing. You all should have long-term investment accounts. And you should also have a trading account, separate. Keep it separate. Don't mix business with pleasure. Trading account is something else. I have one. I do well. My results from last year are on the channel. Literally, it's the first video on the channel. I'll put out my results this year again. Doing well. with all the volatility, I'm managing myself somehow. I don't know. And I'm trying to teach that to my members group, right? That's it. That's what it is. We need to keep ahead. We are in charge of our destiny. Government's not going to help you. It's just not going to help you. Trickle-down economics, not going to help you. Just doesn't work. I'm a capitalist. Rich get richer, middle class gets poorer. They get addicted to credit card crack, plastic crack, and they grind and they die. I'm like, no, I refuse. I refuse being that camp. I want to be in the top 1%. I'm not. Maybe I'm in the top 10%. That's okay. But you guys need to understand how to save in hard assets. It's not a coincidence that stock market is at an all-time high. Gold is at an all-time high. Bitcoin, Ethereum, very close to all-time highs. Real estate, completely unaffordable now to buy a house. It's just keeping pace with inflation. Why is that, folks? Why? Why? How do you think rich get richer? Because they own assets. They don't own cash. They go borrow money and buy more assets to produce more income for themselves. That's what we have to do. You know, don't listen to these people that go like, oh, debt is horrible. Pay down your mortgage. Why would I have to pay down my mortgage? Why would I? Credit cards? For sure. Yeah, don't carry balances because you're getting dinged at 35%. But this is what we have to do. We have to send this message to everyone. Our kids, right? Our grandkids and college kids, whatever they are, they don't understand. They don't know. They just think they're in a wonderful system. You know, banks send you the plastic and they go, hey, go spend it. Okay. And then what? Okay, I just spent it. I'll just carry the $1,000 balance to the next month. Well, that just cost you $35. Just on $1,000, because the average credit card balances in this country, interest charge is about 25%. That's with good credit. If you have okay credit, it's 35%. If you have horrible credit, it's 45%. And God forbid you miss a payment. What happens? So don't put yourself in those situations. Don't make the banks richer. Banks are rich already. Make yourself rich. How do you do that? You invest. You continuously invest. Drip, 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 drip. In 20 years, you look at it, I'm like, oh my God, where'd this money come from? Hey, yeah, that's what happens. Good times, bad times. That's all I am trying to say. So let's go into my favorite topic. Oh, good morning, everyone. Traveler, Luis, William. Hey, William. Too long. It's been about 6 months. Where have you been? Well, thank you, sir. I try. I'm trying the best I can because this country is taking a turn for the worst, and people are not out there to educate, inform. Don't fall into people fall into the trap, man. That's all. Good morning. Good morning. Good morning. Alba 6891. Hello. Melvin, good morning. Good morning. Melvin. My traders here. Yeah. Welcome to the channel. Anyway, so let me go talk a little bit about my favorite topic. Breaking news. U.S. national debt has just gone above, ready? 37 trillion, that's with a T, dollars. Start counting, folks. 1, 2, 3, 10, 20, 50, 80, 100. In 100 days, where are we going to be? 38 trillion. Another 100 days, where are we going to be? 39 trillion. It's going up $1 trillion every 100 days. Now, in order to close that gap, what does the government do? They say they don't print anymore. They just add zeros to the ledger. Well, because we're taking in as receipts at the Treasury through income taxes, capital gains taxes, all kinds of income, right? Treasury gets 5 trillion. How much do we spend a year? Washington? How much they spend? 7 to 7.5 trillion. Well, where is that 2.5 trillion going to come from? What do? We print. Why do you guys think all these asset classes are at all-time highs? Because we print. Because there is so much money in circulation sloshing around. It has to go somewhere to chase return. And it goes to the stock market, and it goes to, Bitcoin, and it goes to Ethereum, and it goes to real estate, and it goes to gold, and it goes to silver. I have a good friend of mine who told me something 6 months ago. He said, don't slave harder, save in hard assets. Get it? That's it. That's the trick. Rich people have figured that out a long time ago. So 37 trillion, folks. No joke. 38 to be 100 days more. 38, 39, 40. Bingo. And, by the way, this is not political. Doesn't matter who's in charge. Doesn't matter if you're Democrats, Republicans. They all spend money like drunken sailors. They love spending money they don't have. Well, 37 trillion now, that's borrowed money, by the way, because when we do create that money out of thin air, we have to issue IOUs. We have to sell debt to the globe, to the pension funds in the US, to hedge funds, whoever's buying those bonds, notes, treasury bills. In fact, Warren Buffett has about 340 billion in treasury bills, more than the treasury itself. Okay, well, when you do issue an IOU, meaning you get a loan, what do? We're not in the Middle East, in a Muslim country where interest expense is forgiven. God, I think it's against the religion. Well, what do? You have to pay interest. So on that $37 trillion debt we have, we're paying currently 1.2 trillion in interest to all those bondholders, note holders. You guys don't think 1.2 trillion could be used for some good in this country? That's just the debt, the interest on the debt, the servicing cost. 1.2 trillion to be 1.5 trillion next year. Okay, and these notes and bonds, what they do? They mature. Well, we have to replace them. Well, all these notes and bonds that we issued 10 years ago when we had zero interest rates, they were issued at 1%, 2%. Well, now we got to pay the piper. Now, 10-year note, 20-year note is almost 5%. So when we do issue these notes, the new ones, to replace the old ones, now we got to pay 5%. So servicing cost of this debt is going exponentially higher now. People don't talk about this enough. I've been talking about this for a whole year now on this channel. So here we are, 37 trillion. Breaking news. Total U.S. debt has officially crossed above 37 trillion for the first time in history. Of course, this puts total U.S. debt up 780 billion since the debt ceiling was raised following the signing of the One Big Beautiful Bill Act into law on July 4th. This equates to an average rise of a whopping, you guys sitting down, $22 billion per day. Okay. Last week alone, the government sold, here it comes, 724 billion in treasuries through 10 auctions. These happen every single day, by the way. The U.S. debt crisis is worse than ever. No kidding. Well, here's the graph. Here's the graph of the debt. You guys see that red line? You guys see how many times we have increased the debt ceiling and it just keeps getting there quicker and quicker now? Great. And I thought this administration was going to come clean house and do some Doge and, get rid of dead weight. No. Kick the can down the road. So we are spending, are you guys ready for this? This is what blew me away. we are spending nearly $3 billion on interest per day. Let me read that again. We are spending nearly $3 billion on interest payments per day. That's the cost of servicing that debt. Simply put, Coinbase letter says, we are on an unsustainable fiscal path and it's getting worse. Great. Well, that's where we are. It's going to be 38 in 100 days. I'm sure I'm going to be on this channel in 100 days. So what's today? 8/15? So that will be 11/15. Towards the end of November, right around Thanksgiving, we're going to hit 38 trillion. Now, what's happening now is that 1.2 trillion in interest servicing costs that we have of this 37 trillion national debt, it's going to accelerate because now we're going to issue bonds at a much higher rates than we did during ZIRP, zero interest rate policy period. FYI, $1.2 trillion is almost 50% more than our total national defense budget. It's almost equal to our Social Security spending. Folks, why don't we can we say, let's just not pay the debt, default on the debt? That will never happen, right? What can we do? How about we create a balanced budget amendment? How about like I run my house because I don't have a printer. I can't just create money out of thin air and spend all the money I don't have. I run the house with a budget. We have budget. Everybody should have a budget, with the exception of Washington. They don't have a budget. Well, they have a budget, but it's been running on debt and deficit and borrow and spend forever now. So there you go. Spread the word, folks. This is reality. 37 trillion to be 38 trillion in another 100 days. I'm sure I'll be doing a segment in the next 100 days about this topic when we reach $38 trillion. There you go. So welcome. Let's see. Melvin. Ha. Very funny. Yeah, not gonna happen. Although they do tweet it like, oh, we just took in 300 billion. Did you see the PPI number, Meta Mike, yesterday? Producer Price Index? That's what the tariffs are going to do. They're kicking in. And the government wants to lower interest rates while all asset classes are at all-time high and inflation is reheating because of the tariffs now. We are in the biggest bullshit box we've ever been in. On one end, we have a fiscal policy that's absolutely broke. And what does monetary policy have to do? Follow that broken fiscal policy. And poor Jay Powell, I mean, not that I'm a huge fan of him, but he's getting in on all ends. He goes, oh, you have to cut the rates. Why do we have to cut the rates? Because the U.S. government has to refinance 7 trillion, 8 trillion in debt. That's why we have to lower the rates. We can't afford to pay that kind of interest, right? It's not for the consumer. I mean, lower rates should be okay for the consumer. Mortgage rates should go down. Maybe people can buy homes again. Maybe credit card rates will go down. Maybe auto loans will go down, but they won't because the Fed cannot regulate interest rates. Yeah, tariffs are not going to do it. Tariffs bringing in $300, $400, $500 billion a year, while our just interest cost is $1.2 trillion a year. Math, fuzzy math. Math is pretty simple. 1 + 1 is 2. Except in Washington, 1 + 1 is 6. Doesn't work. I don't know. Maybe I should run for Senate. Honestly. It's good to see you back. Oh, thank you. I've been here every week, bro. Yeah. Yep, please do so. Get the heck out of that garbage business that you're in. Because that business is coming to an end. Yes, for sure. 1,000,000%. Yeah, that's a little political, but what did the good Doge do? I mean, not much. Trend follow is pretty easy. Yeah. I mean, that was a beautiful chart, right? Going from lower left to upper right. If that was a stock, I would love that. 45-degree angle. It's pretty cool. That was a stock. You'd be like, that looks like Palantir. You'd be making so much money. except that it's the wrong, right? That chart needs to be going from the upper left to the lower right, as opposed to from the lower left to the upper right. That's just a bad chart. Well, I don't know. That's one good thing about Trump, because I want to stop wars. I mean, I agree with that. Well, we are going to hit 38 for sure. And about 38, we'll finish the year at 38 and a half. I mean, it's given. It's every 100 days. You guys can Google it. I'm not throwing that number out of my butt. Happy snappy, sir. MSTU. I don't know. I'm getting bad vibes about that. I'm very tempted, but I'm not sure. No, the senators do. House of Reps are useless. Oh, they're all useless. They're all useless. Just completely useless. Both, but the whole executive branch, legislative branch, they're all useless. It's completely useless. I purchased some land and I'm in the process of paying off. I don't know about paying off your mortgage. Don't listen to, is that his name? Dave Ramsey? Is that his name? Why would you pay your mortgage? That's your best tax deduction. What are you going to do then? I wouldn't pay my mortgage. You'd be in a rush to pay a mortgage. Look, your house is going up, hopefully. Hopefully. You're in a state like my state, California. It's going up maybe 4%, 5% a year, just to be a little bit under the inflation rate. It's like, owning a house is like inflation hedge. That's all there's to it. I bought my house in 22 years ago at $825,000. Then the great financial crisis happened. It went down to $650,000. Today it's probably 1.8 easily, right? Okay, so it's gone up $1 million in value in 22 years. Well, divide $1 million into 22. Okay, so it's gone up 110% in 22 years. Divide 110 by 22 is 5. Well, it just kept pace with inflation, right? That's about it. I mean, what else is there? That's about it. So let me talk to you about the second topic I want to talk about. You all heard of the new racket called Buy Now, Pay Later? It's like the layaway plan at Kmart that they used to have. You guys heard of that? Yeah. It's called BNPL. There are a few companies, Klarna, Affirm, that's what they do. So what do they do? In fact, now you can order food on DoorDash and buy now, pay later. So you eat the burrito, right? You go to the bathroom, and if you carry the balance or buy now, pay later over 4 payments for your burrito, yeah, that burrito is going to cost you more ways than one. But now there is this. So this shows how weak the underlying economy is. Rich folks are fine. That's why the wealth gap is, by the way, is widening. We don't have a middle class anymore, right? All this autonomy coming in, I don't know what's going to happen, honestly. All this AI and all this stuff. We can't retrain 200 million people. I don't know. Are we talking about UBI, Universal Basic Income now? I'm not sure. Not that I'm a huge fan of UBI, but at some point, right? I mean, there's going to be a revolution in this country by the people who can't eat. In fact, these buy now, pay later companies have flourished, have exploded, because more people are using buy now, pay later for everything, including their groceries. What is happening? What is happening in this country? Why would you go buy groceries on buy now, pay later? I mean, I can understand going to Best Buy, buying an 80-inch TV before the Super Bowl or something, and put it on buy now, pay later on 4 or 6 payments. Please, God forbid you miss a payment on those. Don't do it. But your food, your groceries, what is happening? Is the economy really as strong as Wall Street says it is? Because there is Main Street and there is Wall Street. I mean, Wall Street, different animal. Main Street's not doing well from what I see. I see all the macro numbers. I see credit card debt defaults going through the roof. Subprime and prime card loan defaults going through the roof. These buy now, pay laters are coming around and sucking more people in to buy groceries on buy now, pay later. Don't do it, people. See, on that one, I probably agree with Dave Ramsey. I go, okay, don't buy anything on buy now, pay later. Now, if it's a major purchase, your refrigerator broke, you're going to spend $2-3 grand, you don't have the money. Okay, maybe you should use buy now, pay later. It's a major purchase if you don't have the cash. I get it. But these things comes with a cost, especially if you miss a payment, okay? But doing it for everyday living items is ridiculous. Just I don't know. But that shows how desperate middle America is, or average Americans are. Because they're down to going and buying groceries on buy now, pay later plans. I don't know. Either Wall Street is wrong because every asset class is at an all-time high, or Main Street is wrong. I don't know. I think, Wall Street is Wall Street. They're going to do what they do. They're going to try to extract as much profit as possible from everything. In fact, a company called Klarna, which is the largest one, was about to go public and have their IPO. But now they're suffering massive losses because people are defaulting on these buy now, pay later plans. And I don't like the picture. I don't like the picture that I'm seeing. And here it is. Annual buy now, pay later BNPL transaction volume is expected to reach a record 116.7 billion in 2025. Look at that chart on the right, folks. It started in 2019, that brilliant idea. Look at the size of that bar and look at the size of this last bar. That would be double of 2022 total and 7 times higher than 2020. BNPL use is exploding as consumers are increasingly searching for ways to borrow for spending. See what I'm talking about? This is the other problem we have in this country, because our GDP is about $28 trillion. And out of that 28 trillion, 75% is consumer spending, and consumer is down to buying groceries on buy now, pay later plans. I don't know. So that's also like giving me a little bit of pause. I'm like, when I buy a stock or trade, I go like, what am I buying here? Like, are we about to go into a recession? Are we going to go crash? I mean, I'm not a pessimistic person, but I have to think about this. A Lending Tree survey showed that about 25% of users now rely on BNPL to buy groceries. Oh my God. Let me read that again. A Lending Tree survey showed that 25% of users now rely on BNPL to buy groceries. What is happening? Up sharply from 14% last year. Not good. Meanwhile, almost 25%, a quarter of BNPL users missed at least one payment in 2025, up from 15% in 2021. So buy now, pay later plans are like, you can just buy now. We don't charge you interest if you don't miss a payment. Well, people miss a payment. You know what happens to that cost of that refrigerator that you just bought? It doubles. Folks, if you're going to do this, please, God forbid, don't miss a payment. Okay? It's bad enough that you have credit card crack in your pocket and spending like a drunken sailor. Now you guys are using buy now, pay later for groceries? These are big numbers. This is not a joke. 25% of BNPL users miss at least one payment in 2025, up from 15%. What does this say about the average American? What does this say about the economy? I don't know. Anyway, Americans are piling on debt like never before. Yeah, that's where we are. That's where we are in this country. So, the average American is behaving just like Washington, the big brother. What are we doing in Washington? We tax? No, not tax. We print and we spend. What are we doing as individuals? We borrow and spend. We love borrowing. We love plastic. We love now buying buy now, pay later plans on our groceries. 25%. That's a big number. So if people are down to, they probably have maxed out all their credit cards, buying stuff that they don't need, most likely, making minimum payments on those credit cards, which is going to take them a lifetime to pay. Now they're going to buy now, pay later to buy groceries. What is happening? What is going on? Again, instead of doing all that, imagine all that interest cost. Imagine all that interest, people are paying to banks on these credit cards. On that one, I agree with that guy that doesn't like that. Credit cards, you shouldn't carry. Mortgage, completely different story. But God help these people, because they certainly are suffering. And whatever paycheck is coming in on their W-2 is certainly not enough, because it's not going up 6-7% a year as much as inflation is. It's not keeping pace with that. So they're, forced almost. I mean, nobody's put a gun to anybody's head to go use buy now, pay later to buy groceries. I get it. But they have to put food on the table. They have to do something. They have to keep a roof over their head. And what are they doing? They're doing this. Then you miss a payment and interest rate goes to 50%. You're in a much bigger hole. It gets reported to the credit card agencies. Your credit goes into the tank. You guys see what's happening here? Don't do it, man. Just have a budget. Stick to your budget. Don't buy crap you don't need. Don't do impulse buying. People love buying, because half the people in this country are depressed. They just go buy something for themselves and they make them feel better. It releases some endorphins and stuff like that. And I'm going like, this is not cool. We need to educate people. We need to talk about this stuff, But unfortunately, that's the system that we built, and a lot of people fall into the traps of these financial wizardry, right? And they pay the price. So that's it. Don't do buy now, pay later for anything. Anything. If you don't have the money, don't buy the thing. Period. Done. And if you do carry credit card balances, pay it every month. In fact, I love that idea. You're floating bank's money for 30 days. You're borrowing money at zero interest for 30 days. As long as you pay the balance at the end of the month, wonderful. Grab all those credit cards, charge them up, but then pay at the end of the month. You are literally floating their money. Just like they do with you when you go deposit your check at the bank, these funds are not going to be available for about 6 more days. What do you guys think they're doing with that money that you deposited? Why isn't it available? Because they're putting your money and everybody else's billions and then floating that money, earning interest for 4, 5, 6 days. So you do the same to the bank. You go charge it up, pay the balance. Charge it up, pay the balance. Good for your credit score. Good for everything else. Do what they do to you. That's all there is to it. But please don't do buy now, pay later and buy groceries. Just don't do it. Anyway, so that's it. I think I'm done. Good morning, Vic G. Where have you been? You've been absent. Poop and pay later. Yeah, that's exactly right. You eat the burrito, you poop it, and then you pay it later. Okay, I get that. Well, then you shouldn't be any rush to paying the mortgage. Absolutely. Absolutely. It's the only saving grace you have. Okay, that's a good idea. Good idea. We know it's over when people have to use money. Yeah. I don't know. I mean, but look at the market and look at Wall Street, look at Main Street. One is clueless of the other one. I don't know what's going on. So people who are using buy now, pay later, I bet you have no investments. None. And people on Wall Street, they look at down as, oh, look at this product I created. Now I can suck more blood out of the rock. I'm like, okay, good luck. Big G, good morning. Oh, okay, sounds good. That's actually a wonderful language right there. I mean, yeah, you could do that. Yeah, you're in the car business. You should know. Absolutely, they are. They are. The prime, and I'll talk about that next week. I mean, I look at all these charts, by the way. I go to a place called Federal Reserve Economic Data. It's free. You guys can go Google it. It puts out all this data, right? Credit card balances, credit card default rates, what levels, comparisons going back 2, 3, 4, 5, 10 years. You know, auto loans, mortgages, defaults, all this stuff is there. FRED, Fred. Okay, I'm not just blurting it. I mean, you know. Okay, let's look at that. Committee for Response. The new tariffs could generate 1.2 trillion in net new revenue through the end of current presidential term. That's 4 years, so that's 1.3 divided by 4 is 300 billion, while our yearly interest cost is 1.2 trillion. It's not even like a drop in a bucket. And 2.8 trillion through 2034. I'll be dead by then. It's not going to work, William. It's hocus pocus. Vacation? What kind of vacation was that, bro? That was like a month-long vacation. A firm has been established. Yeah, I know it has. Because of this, buy now, pay later. People are buying groceries on buy now, pay later. That's why the stock's going up. You know? Yeah. Anyway. Do I want to gamble and buy open? We traded open. I did actually covered strangle with open. I don't want to gamble now. I don't gamble. I try not to gamble anyway. All right, so what are we going to do? Let's remove these. Let's go to the positions. Having a nice green day. I had anyway. And let's go there. You guys can see that, I'm sure. Okay, so adding to some positions. And taking some off. No problem. Just trading, folks. So I am long 80 AEVA. September 20 calls. I got stuck with this position, so we'll just see where it goes. This is new position actually. I have short puts, long calls on CoreView, CRWV, but I'm short puts. I was short puts. I bought them back at a nickel, and now I'm buying September 15 calls. I'm up to 30. I'll buy some more. In fact, I'll put an order in now. I'll buy some more. Let's buy 10 more of those at $1.50. Okay, that order is in. I'm doing this with the 2x ETF of CoreView. So the symbol is CWVX. I put on a covered strangle on HIMS, which is the 2x ETF of HIMS. Bought the stock at 1732. Bought 1,000 shares, sold 16 puts, and sold the 18 calls expiring today. Stock is 1720, almost even, but then I collected 85 cents on the premium, so it's a profitable trade. I am long 8,000 shares of LAC symbol. It's called Lithium America Corp. I am in about 80% cash, by the way. It's burning a hole in my pocket. 8,000 shares of LAC, cost of $3.13, but my actual cost is $3 for the fact that I had sold calls last month for 13 cents. And about 2 weeks ago, I sold the 3 calls, as you guys can see with negative 80 here. I sold the 3 calls and sold the 2.5 puts, so they're expiring today as well. So I have a lot of stuff expiring today. And yeah, They expired worthless. I lower my cost some more. So on those, I collected 20 more cents. So my new cost is going to be 280. Stock's 294. Now it's a profitable position. Hopefully we'll get a pop or not, or I don't know, but it is what it is. Last but not least, I started trimming. I'm long 25. I was long 50 as of this morning. October, 250 little lemon calls, just straight calls. October 17 expiration. Cost now is 366. They're about 470, so I'm up handsomely on that, about a couple, $3,000. So I'm trimming it today. At the end of the day, I want to be down to 20 on that, and then just keep the 20. So those are the positions. I was down to 3 positions. Now I'm up back up to 1, 2, 3, 4, 5 positions. But I'll just start, pressing a little bit. Pressing meaning I don't want to gamble. Okay. So let's go to the charts. Let's do that. Let's go to the big charts. Actually, I want to put on a call credit spread. Let's see if SPX is rallied enough for me to do that. This is CWVX. That's the 2x ETF of CoreView, but let's look at SPX first. I don't think so. Let me see if it did it. No. 64.58. Where are we on that one? 0 DTEs. 64.58. So can we do 64? What can we do? 64. 64.58. So let's say 64.60. Can we do 64.70, 64.80? We can for 75 cents. How much time we have? 2 hours? Nah, not worth it. Not worth 75 cents. Well, if we do pop here, I'll put it on. So I want to do the call credit spread, meaning you sell the 64.70, buy the 64.80. So back to charts. So that's the SPX daily. Let's look at the dailies, and I'll go through some charts on my watch list. SPX, I mean, very close to new all-time highs. Nothing to see here, folks. It just keeps going from lower left to the upper right. So all good. Let me just go through the positions real quick. AEVA, death. I traded it, actually. I traded the equity. I made like $1 or something, but look at that. Stock high 38.80. Stock is 13. I rarely see a stock go down like 14 out of the 15 days being red, and that's what happened on this one. But it's all right. It's a supermarket basket. As I say, one position is not going to make me or break me because my position size is correct and I handle risk reasonably correctly. Second position was CWVX, which is the 2x ETF of CoreView. This is CoreView. That stock sold off literally, let's see, $55 last 4 days for the fact that share lockup happened, expired, so insiders can sell shares now, and obviously market will do that before share lockup. Hoping for a little bit of a pop here, so that's why I'm not playing the stock itself. I'm just doing the 2x ETF. That 2x ETF was $29.49 4 days ago. It hit 1080 this morning. If you're dealing with these 2x ETF, folks, be super duper careful. This is Lithium America. 294. I mean, I have 3 calls. If it's above 3, I may get called away. But if they do, they can have it. If not, we'll just hold on. 8,000 shares. Maybe we'll get a pop to 4 or 5. I don't know. We'll see. Next one is HIMS 2x ETF of HIMS. So we all know yesterday they had some sort of news that pushed the stock lower. Today it seems like they were about to go green, which is fine. Actually, we're unchanged. We just went green. And I'm long the 2x ETF in a covered strangle. 1711, 1712. I have the short 18 calls and I have the short 16 puts, so we're right at 17. Most likely they're going to expire worthless, lowering my cost basis. So we'll just hold on to this. And unfortunately, they don't have weekly options, so I will just have to hold on to the shares. Last but not least, Lululemon. MACD is crossed over. We're throwing a really, really cool bullish divergence here. In fact, Michael Berry, the famous short that took advantage of the 2008 mortgage crisis, bought shares actually. I'm not crazy about it, but about 203 resistance. If we do take that, I will take my calls, 20, 25 calls for a bounce to probably 215 range. So those are October calls. We're just holding our stock is really, really oversold. Let's go through the Mag 7, Apple doing a little correction, buy on pullbacks without a question, or AAPU, which is the 2X ETF. Amazon did well yesterday and today, back to 52-week highs almost. Microsoft, all-time highs or close to it. Meta, same thing, almost new all-time high. Some of the nosebleeds are giving up a little bit, but expected. Palantir, for example, down, actually, let's see, 195 or 190 was the high. Today we got as low as 167, so big deal. Actually, it's 20-point correction, not bad. And Hood, Robinhood, beautiful charts. These are all buy on pullback charts, but then I have my list ready to do that. As you guys know, Ethereum is hot. One issue that I'm seeing here, I've talked about this a million times already. You guys can go check out the videos I have. Something called MNAV, multiple to net asset value, which is on Strategy. Strategy is Michael Saylor's company. He keeps buying Bitcoin, obviously, right? Actually, it bounced a little bit. So MicroStrategy MNAV is getting squeezed here. We're down to 1.4. That's the premium to net asset value. Net asset value being what they hold in Bitcoin. They hold 685,000 Bitcoin, about $72 billion worth of Bitcoin now. They're buying literally every weekend. But this MNAV was up to 2. It's down to like 1.42, I think now. So I bought 1.3. I think I'm going to buy the shit out of it. Not MSTR. I'm going to buy MSTU. There's a chance they take it to par. Par would be 300. I've been trading MSTU forever. You guys can see I'm not taking the labels off anymore. I've been trading MSTU for a while. Selling the puts, getting assigned, selling the calls, things like that. So I'm really watching that because Bitcoin is not selling off. This is IBIT, BlackRock Bitcoin ETF. It's just going sideways about 118. MSTR selling off that hard makes no sense other than MNAV getting squeezed. Now, Ethereum is the new hot button. This is the 2X ETF of Ethereum. ETH, is it ETH? ETHD? Is it ETHD? No, this is the bearish one. ETHF? No. What is the 2X ETF of Ethereum? What is it? Let's take a look. There are all these treasury asset companies that they're building now or putting together now, which I'm interested. Because Tom Lee is running BMNR. I know that one. But what was the Ethereum one? He's buying Ethereum literally. He just actually about to issue 20 billion more BMNR to buy Ethereum. He thinks it's going to 15,000. It's about 4,500. Let's see. What is Ethereum's? Oh, there it is. I got it. ETHU. Okay. Ethereum must be down. Here it is. Yeah, a little correction, but look what happened to that 2X ETF. It went from 50 to 175. So that's the one to trade if you're going to trade Ethereum. And ETHD was the 2X ETF reverse one. I'm following BMNR really closely. That's a Tom Lee one. Down about a couple, not much. He's the CEO of the company, and they're about to issue 20 billion more shares to buy more Bitcoin. I mean, more Ethereum. Let's go through the charts, a few more, and then I'll answer some questions and say goodbye. Affirm, the buy now, pay later public company, almost an all-time high. Now you guys wonder why? Well, that's why. When people start using Affirm or Klarna and to buy their groceries on buy now, pay later, that's what we have. AMD, yeah, pretty close to all-time highs. Beautiful charts. All these, just beautiful. I'm trading. I'm trading more of the 2x ETF on all these. When they exist, so you can Google it and figure it out. ASTS, that's in a buy range. Earnings came out, they were okay. And this 2x ETF, but that is ASTX. Yeah, I think I'll give that a shot with the 2x ETF. This one is kind of interesting. They're going to buy Ethereum. It's called ATNF. They're changing the name of the company, and Peter Thiel bought 7% of the company. This thing was 45 cents or 50 cents. It went from 50 cents to $18, folks. So be careful with these. And now it's down to 680. I'll probably give this a crack at about 5. The reason is there's MNAV on all of these, by the way. So they have, you guys got to go check my videos out on MNAV, how you calculate MNAV. Multiple to net asset value. Beautiful chart. Actually, you guys can go check all this out. Bloom Energy. Beautiful, beautiful chart on the breakouts. You guys got to follow those. Kava. I sold some puts. It tanked, but I sold some puts. I own it about 73 in my investment account. Like the company still. Oh, let's see. Coinbase. I'm just going through real quick. I actually traded the 2x ETF for that. I'm going to trade more of these 2x ETFs as underlying equity as opposed to options. So options are not making sense at the moment. Ooh, what happened to Enphase? One of my members just bought it today. Whoa, you guys were right and I was wrong. And they were saying, why don't we buy Enphase? I'm looking at the chart and I'm going like, that's garbage. Up 10%. Congrats, group. See, I should be listening to you guys instead of you guys listening to me. Huh. Look at that thing. It's coming into resistance, though, in 50 EMA. But it may have bottomed. Truly. This may be a Nike moment. Okay. Now we can take a look at it. Gold. Because gold is going to have a mother of all rallies coming up or a mother of all sell-offs, one or the other. It's been going sideways since April. This is the next leg up. Gold is going to be 4,000 or 3,000. Nothing else. HIMS we looked at. Hood we looked at. What else are we looking at here today? Joby Aviation, the biggest bubble in the history of all bubbles. They popped it out today because they did a helicopter trip. I was short the stock. I traded it, made some money. I want to be short Joby Aviation the worst way possible. In fact, it's just about to die on any rally. And actually, they rallied to 19 this morning because they completed a helicopter trip. It's company's worth $15 billion. They don't have a dollar, not a single penny on revenue. Forget earnings. Yeah, well, anyway. This is LAC. What did we sell? Oh, sold 5 more Lulu at 475. Okay. All right, cool. So we're down to 20, I think. Okay, no problem. Wow, big rally on Lyft today. What is going on? Are they going to get taken over? Look at that. Interesting. Hadn't seen that. I'm looking at my list. Hey, group, what did I say I want to short yesterday? METC. Did I say that? Non-confirming technicals, bearish divergence, MACD. Yeah. Oh, hey, MSTU is rallying a little bit at least. Mojo. Micron. Yeah, buying pullbacks for sure. Neo, one of my members, hot to trot on this thing. It's been consolidating. I mean, if it takes out 5, this thing can move. I mean, it's a garbage company, garbage Chinese automaker, but hey, what do I know? Nvidia, the all-time highs keep grinding higher, folks. I mean, yeah, open, we did trade. Oh, is it 340? Nice. See, you see that? You see that? The red and the green label, VIC. I bought the shares, sold the calls, sold the puts in 2 days. I think I bought 5,000 shares. Yeah, 5,000 shares at 231. Sold 5,000 shares at 230, but I had sold the 2 puts and 2.5 calls for like 40 cents. It was like an 80-cent trade in 2 days on 5,000 shares. It's a good trade. Very good trade. Yeah, folks, that's about it. Oh, I'm just going to be like white on rice on if the stock pulls back a little bit more. Just pulls back, period. Not more or less. Sound hound. You guys can see in the past how I talk about it. Earnings were amazing, gapped up. Any pullback now, any pullback. I mean, just give me a pullback to like 14s, low 14s, mid 14s, something. I'm going to be over the, like white on rice. One thing I don't like is TLT, which is the 20-year Treasury ETF, inverse ETF. So that means TLT going down. Interest rates are going up, actually. Nobody's buying what the Fed or the government's selling. Okay. So the market is going to do what it's going to do. Fed cannot control interest rates. Everybody, including Warren Buffett, is buying United Healthcare. That is a beaten down healthcare stock, as we know, after their CEO got hit and all kinds of investigations are going on. Got down to 234, up to 309. Nice move, actually. So now they put the floor in. Now you guys can trade it. On pullbacks, you guys can trade it. Yeah, that's about it. One other stock I like is Zeta. ZETA, Zeta Global. Earnings were great, gapped up, went over 21, pulled back to 17. That's what I want SoundHound to do. Please, SoundHound, give me a chance to get in. And Tesla. Tesla broke out, pulling back to where it's supposed to pull back to. We're definitely going to trade TSLL on that one, the 2X ETF. All this sideways action, right, is going to have to be resolved somehow. And we broke out of the wedge that the whole world was watching. Now pull back to 20 EMA. I mean, support is here. My money says I should be long Tesla. Low risk trade, really. So yeah, folks, that's where we are. What else is going on? Yeah, that's where we are. So let's go to the front and answer some questions and say goodbye. ETHD. Yeah, he did. There you go. Good comment right there. You live in Vegas, don't gamble. Don't miss no payments. Yeah, I hear Vegas traffic is pretty down too. I agree. Possible daily bearish divergence coming up on SPX. Yes, it is. Yes, it is. It's very hard. Don't anticipate. Once it gets going, it's plenty of time. Michael Berry, yeah, he did get calls. Leaps, long-term calls. My trade is short. ETHT. Is that a stock? Oh, it's ETF. Is that the ETHT? Let's take a look. Let's take a look. ETHT. Yeah, that's the one I was looking for. Oh, you're telling me it was ETHT? Okay, never mind. Bad. My bad. My bad. yeah, so that's where we are, folks. Hope you enjoyed Power Hour. Please put a thumbs up. Please share. Please share those two topics I talked about. Talk about in your, um, you know, friends and family circles. This is not a way to run the country, but it is what it is. But then the writing's on the wall. You have to invest in hard assets. They're literally just telling you what to do. If you can put the picture together, that's where you need to be. You need to be investing in hard assets. You may say, oh, what if there's a crash? What if this? What if that? I can't think like that. I'll just trade what's in front of me. Long story short, that's where things are at. Government spending is never going to end. Okay, this is too late now. They can't just go. Oh, we're just not going to do it. Then we will crash. You know what I mean? So, just going to kick the can down the road. So put a thumbs up, share, subscribe, tell other people to subscribe. If you want to become a member, please click join. Send me an email, sergio@sergioavedian.com. I will send you the Telegram chat group link where I post all my trades live. It's a wonderful small group at the moment. I don't know, maybe it's 40 people. It's awesome. They're learning. They're teaching me. In fact, I should listen to them. Look at Enphase. Doug, you're not here today, gunslinger. I have a gunslinger in there. He just goes in and out faster than you can blink. But anyway, so happy Friday. Have a great weekend. I will see you guys Monday on Trading with Sergio, Monday edition. Adios.